Focus on what the market does, not what the market says. So in today's video, what we're going to do is go over the S&P, go over the NASDAQ, and what it actually is doing on the inflation data. Then we're going to go through 10 names that you need to watch next week. Make sure you stay to the end because I'm going to get in depth about one that is now becoming one of the most searched names out there by institutional traders. Subscribe to the channel if becoming better and being more educated is important to you in regards to trading. That is our number one focus. We give out actionable information in a very timely manner, and we also give great educational videos as well as do daily live streams. This is the hourly on the S&P. Below is the volume. I listened to what you guys said about making this bigger. On the comments, so I did make it a little bit bigger. Any other comments to make these videos better? Simply put them below. I answer every single one, and I appreciate them. So if you can just see where we're at, right? We have these gap downs on the PPI, which was, to me, frankly, surprising. And we're going to get into the PPI and what exactly is going on there. Really, what we want to do is not just focus on the CPI and the PPI, which we're about to, but to focus on the actual market and what did the market do on all this information. On Friday, in the Alpha Chasers community, I said that it looks exactly like last Friday. It seems to me that that is what is shaping up here. And that's exactly what we got. So if we go back to last Friday, we thought the sky was falling again. We had the Chicken Little move right ahead of it. Then we went sideways. Everybody needs to get out. Market's going to collapse. I knew this was coming. You know, all the bearish sentiment out there. And everyone became an economist. Now, if you go across here and you can see how we're popping up, it's the same exact system. So what does that mean? Does that mean it's going to be the same exact trading? That we don't know. We definitely have some things here on the S&P we're going to have to pay attention to going forward. You have these higher highs here on the hourly chart. You don't want to rule that out. You don't want to pretend that these levels that you might want to screenshot that or write those levels down. You don't want to pretend that they're not important levels. Of course they are. And we want to zoom in here on an hourly, but multiple time frames, ladies and gentlemen, multiple time frames. What does this look like? It looks like a dragonfly doji to me. It is not perfect where you're at the top. So it's not a perfected dragonfly doji, but it is there. In other words, we opened and closed over the open, and look at that. Complete and utter rejection all day long for the bears who, if you were short, did nothing but feel pain all day long. The undercut right here, so we obviously know that that 4070 level is really important. And what would that be if we just flipped over this? Well, if you gap up, it's called an abandoned baby pattern. If you just simply got up over it and then moved on a higher high, you would have a perfect morning star. So these patterns are everywhere, and when you learn them, this becomes a lot easier to read. So I'd suggest that you would focus on candlestick patterns, and I'll link a couple videos at the end. Zooming out on the daily of the S&P, you can see right in here, just look at that little dangling mark. You still have your cross right here. You still have your golden cross right there. So I don't see the issue here, guys. I really don't. We pulled back. We didn't break. We tried to undercut. That didn't happen. Zoomed in weekly version, you can see us just simply riding that line down. The dark green line is a 55-week moving average. This is a 200-week moving average in black. So you can see our levels right here, and it really doesn't look like we did anything, does it? We just kind of went sideways here and just had a lot of panic. When in doubt, zoom out. So you're looking at the weekly, and you can see here's a lower low, right, from over here. After you made that higher high, then you made a lower low, then you made a lower high right here, and then you made a higher low, and now you're trying is the key word, to make a higher high and get above and stay above. Now, the NASDAQ composite is way more fascinating. If you take a look at what's going on in here, not only are you forming a flag, but you essentially have two inside weeks. So from this huge breakout in January, you're just going sideways. That's all we've been doing. And let's zoom in on this and really get in there. So when you have an inside bar here, that's really powerful. You have two inside bars. Whatever way this goes, it's going to be volatile. So I would suggest letting this play out before getting overly committed, but you have some earnings coming out that we're going to go over here in a moment that could be very decisive for this name. Some really big semiconductor companies are coming out this week, and there's some huge earnings we really have to go over that already happened this week that are pretty pivotal. And I just really want to focus on this. That is very decisive. So if you want to figure out which way we're going to be leaning, does not mean there is no guarantees in this, but you want to use those levels that are over there on the right, the 11,650 and the 2077, let's just call it that, the 1277, and go from there. Zooming in on the NDX 100, and I just want to stay focused on this for a second. This is 100 stocks. So this is the top 100 stocks in the NASDAQ. Look at the difference here. See how you're not able to close above that 55? See, you were not able to do that for very long up here. In other words, you've got that bar where you flipped, but you never had that confirmation bar where you were able to close over that 55-week moving average. That's significant. We cannot rule that out. We must pay attention to it. And if you've been following me for some time, you know that I believe very strongly in dojis and that dojis are signs of uncertainty. You had a massive battle this week, guys. Look at these battles on dojis. Pay attention to them. Don't rule them out. One of the things I tend to focus on this channel is reality and what is actually going on. And the reality is that Tesla has done nothing but close at a new weekly high every week this year in 2023, every single week. So as we're sitting there and debating the demise of Tesla, we do have a trend line right here, 208.31, and that is a pretty significant demarcation line, and we can see how we've been responding to it. Support flips to what? Resistance. So we have to watch that. We must watch it, but we do not have one close below that level. Really quick tip, find a breakout, look at the bar that broke out, and then see how the stock reacts to that number. So here you have a high tight flag, 3-bar pattern breaking out, bonk. So you take the low of that bar. How did we respond there? And you take a look at that level. How did we respond? So we broke it as if we were going to finally break, right? This is your first close below that. You need a confirm move over here to confirm that that move is significant, right? So they undercut you, and then what do? They run it up. They give you a what? A doji. When they give you that doji, they flip the doji. That was it. That was it. That was a very clear signal on Friday, and this was actually a trade that I took. Now, trading up, little games, gives you a little gravestone, and then what's it do? Close at the highs, okay? Do not sleep on Tesla. You can see very clearly how you are wedged in here, but let it play itself out. Understand where your demarcation line is. Understand that this doji should have been significant enough to break us down, and all it did was track us right back down here. So watch this, but this is a piercing pattern. And I would strongly recommend that you start wrapping your head around piercing patterns and candlestick patterns. They are everywhere. This is glaring. This is setting up to take out a new high. That's how that chart's set up right now. Okay, this is your pivot bar. Breaking above that, and you should push. Airbnb had a huge run up, and then we kind of broke that level, and we really couldn't get up off the ground, but I think we should pay attention to this. So in other words, we had an estimate surprise of 87.49%. We were looking for 25 cents, and they came really close to almost doubling it at 48 cents, and revenues were up. So the demise of Airbnb does not seem to be there. 135.25 or 29 to be exact looks pretty clean as a level. You can see the W right here. You can see this volume spike down here. Pay attention to that volume spike on the weekly. If you just kind of come down here and you just draw a simple line straight across, you'll realize that you had the highest weekly volume that you've had in the company's history. Don't sleep on that when you see things like that. Just going to point this out. So after earnings, I have 17 target price raises. 17. I can't remember the last time I saw something like that. It's pretty significant. You have one sell rating on the stock, and you can just see everybody either maintained or reiterated their position, which is fine. I don't care about that as much as every single one of them, whether they had a sell or not on it. Goldman has a sell out there at $98. How's that working out? Not too well. Remember, out of the ashes of bear markets, new leaders are formed. Whether or not this one is remains to be seen. Speaking of new leaders, and Crocs has been around for some time, but this is just so impressive to me. If you take a look at this level and where you tried to get through that 141 the other day, here's a beautiful flag forming into a pendant, right? Comes back down, tries to test that breakout bar from the doji, and what's it do? Pushes. On this weekly chart, look at your volume spike right down here. Look at this volume spike. It's just super, super impressive on a relative volume basis. And I would focus on that. I would not sleep on this. I'm trying not to laugh about it, but that is not the worst looking chart in the world. I've had other charts that look poor, and I know that's not the way that you want to view a stock as, oh, that's not that bad. But when you just put a couple very simple lines in there, a couple very small demarcation spots, that's pretty clear what's going on there, right? So we have a battle going on in Crocs at that 130, 150 level. We held there. The open and close were right there. Everything else is noise. And we know wicks are price rejection. So maybe it's not I have to be in right away, but to not have this on your radar right now, I think is a mistake. You had decent earnings. You can see that you beat by 17.5% and you beat on revenue. Okay, these are not signs, to be clear, these are not signs of recessionary times. And we're going to drill into that on the CPI and PPI in a moment here, but let's go through some more of these names. So this was DraftKings, and this was one we actually traded in the Alpha Chasers community. Link up here to get on the wait list. Invitations will go out next week, and then the community will shut down for a period of time. So you can see right in here and how you're at that 14%, right? And that 14% gets us a surprise. Did we bleed money? Yeah, we still lost money, but look at the revenues. So who's spending discretionary money gambling if you're in a position that you're worried about your income? Not many people, right? So I think this idea that we're definitely going into a recession and that it's obvious, maybe not. But I think we're spending a little too much time becoming economists, and we need to spend more time focusing on the charts and the actual stocks now. Let me explain what I mean by that. In front of us is the CPI year over year. And it was important during this period in time for us to really understand what was going on, right? And then you can start seeing around July how we started coming down. And yeah, this number was a kick to the market. It was substantially higher than what we expected, coming in at the 6.41 versus the 6.2 estimate. But if you look at the numbers down here, they're still going in the right direction. A matter of fact, there are times when we are dropping only 4 or 5 basis points year over year, and then all of a sudden you have a gap down. And if you really study how this works, that is usually how CPI plays out. In other words, you have gap down, and then you just kind of go sideways, and then you see another gap down. Similarly to what we're seeing with the PPI, and everybody was very upset by this. Frankly, I did not expect it to be this bad, but if you look at where you've been since July and you start going through those numbers, every year over year estimate is coming down. So maybe it's not dropping as fast as the average retail trader would like, but that doesn't matter. It's still going down. So we have people traveling via Airbnb, we have people gambling and spending money on Crocs. Not exactly the consumer being weak. Perhaps just consumer behavior is changing and people would rather spend money on experiences instead of buying things on Amazon. You have to look at all the nuances. But let's look at this volume and go, when was the last time we even remotely had volume like this on DraftKings? Well, we could go back. And now we're going back all the way to 2021 in June. So we have not had volume, buying volume like this, okay? Or volume in general from what I can see for about 2 years on earnings. Do not rule that out, okay? I know it's not overly exciting, but 6.5% revenue growth is pretty good on a surprise size from a company that just means that more people bet. Now, people say, oh, it's the Super Bowl. Well, last year was the Super Bowl too, right? Doesn't matter. They put that into their numbers when they come out with an earnings estimate, the analysts do. So it doesn't really matter to me. Now, getting through this 21.14, the level that we had when we did this in the room was actually 21.17. If I can get through this level right down here, I can get to this 25 very, very quickly over here. Once you're in these gaps, that is pretty much it, right? That's what you're looking for. You can start pushing through those gaps, and then you have this long red nasty bar right here, and then after that long red nasty bar, we should push a little higher. Now, what I like about AutoNation was no other car company really moved on this news. In other words, KMX did not move, Carvana didn't really move, and I think that's really an important distinction. If you take a look here, revenues are up, earnings are up on a percentage greater than revenue. So you're pretty levered there. And I'll take a 10% upside surprise on a company that is in an industry that we all thought was pretty much dying. All we're hearing about is repossessions this and repossessions that. And we're not really seeing any of that, are we? Right? In other words, we're seeing these names come out and have record revenue. How are you having record revenue in times like this if we're going through a recession? So you just have to start connecting the dots and stop listening to the noise. I don't think today's the day. My hope, and there I go again, hoping, is that we go sideways for a little bit and build a flag and then set up in a push. Something like that I'm going to want to pay attention to because this is over a year base. So I have over a 2-year base, or a multi-year base is a better way of me saying it, right in there. So I would not be ruling this out at all. I don't even need to put moving averages in or anything else. That's about as clean of a base as you could possibly get. You can see the retest and then the breakout. So I don't like really buying things up here. Now, maybe if we flipped and pushed, there might be a short-term trade, but I'd rather go sideways. The weekly is much more significant. You can see that 3-bar pattern right there, which we talk about all the time. Make sure that you get the newsletter, link in description. I go through a lot of these patterns and charts of the week that you should be focused on directly to your email. It's free. So you see that level right in here? Right, so you flip that, you have that little doji, everyone's expecting that to break. So this is technically, to be super technical, that's called a bearish harami right in here. And what people are expecting is they're expecting that to break to the downside. No other patterns move faster than failed patterns, right? So in other words, when people are expecting something and it doesn't happen, nothing moves faster. In other words, here everybody thought we were going to break, and when you don't break, what happens? You reverse, you push higher, right? Nothing will move faster than a pattern that is broken in the opposite direction. Nothing. Nvidia pulled back to levels not seen since last Friday. So what's going on here? Well, 230 was pretty clear, right? This is actually something we had in the newsletter. I just said that you may want to subscribe to. And we were in around 213 and it moved and pushed to about 230. Now, why is this important? Dojis. Okay, so we are at inflection points in here. We are sitting at a very core level that we must pay attention to. And you're setting up this undercut and then flip. So what does that mean? Well, that means that right here you have a left shoulder, a head, a right shoulder. You had a neckline right here that you broke, didn't you? Now, you've confirmed your higher high right here. So your inverted head and shoulders on the weekly is confirmed. But that doesn't mean that you don't see 193 and a retest of the neckline again, which is not going to make everybody warm and fuzzy if they are long the stock. So what do? Well, we have to understand that just because one pattern's in play does not mean that another pattern is not in play, right? So we're going to want to watch this and we're going to want to see how we act up in here. I don't like hitting higher highs and then them rejecting with wicks. That is not something that makes me feel good. Now, that could be because earnings are coming up. We have earnings this week and everybody will be watching this. I have a position here and my goal is to try to stay in the position and work it up into earnings. And if I'm up more than 10%, which is my cutoff, I will stay in for earnings. If I am not up over 10% in the entire position, I will mitigate it either by delta hedging it out, or I'll just close it out and just look at getting involved after hours. Out of the ashes of bear markets become new leaders. That is pretty clear what's going on there, guys. Pretty clear where your resistance is, right? So 411.49 on Hubs is the level you want to watch. You saw it sell down on Friday. This is an enormous move for people that have been sitting with this for some period in time, right? So if you've been up in this level and you've been sitting for some period of time, this is where you're ready to get out. You've had enough. That does not mean that that is how this is going to play out or how this is going to stay. One of the things you should be focused on, I can't stress this enough right now, when you're coming out of bear markets, which you are out of a bear market, whether you want to believe that or not, 20% is the super technical definition of that, and you've already achieved it. If you start taking a look at where you're at on the volume side, on the buy side, I have 2, maybe 3 times that I've had that kind of volume, maybe. And all I have is this enormous base now sitting here, right? And this is what you want to be focused on, these bases. That's what the beauty of bear markets are. They form these bases. Doesn't mean you had to buy here and sit with it for 6 to 8 months. But now that you have this year base setting up, don't rule these kinds of names out just because they pull back for one day. It's going to be a huge mistake for people, and I fully expect them to make it. I've seen these kinds of markets play out probably about 4 cycles like this before. So you want to probably watch that 397.44, make sure that you really don't close below that. But other than that, I think you're fine in here. And let's just let it go sideways for a period of time and maybe set up a nice pattern for us and break out. That's the goal here. The goal is to put ourselves in a position for success. Now, WWE is trading at a market cap of roughly $6.5 billion at the time of filming this. See that 87.09 level? Okay, so that would probably be your stop. So this would actually be able to get you in here for $1. Now, Vince McMahon has come out and said that he wants $9 billion for the company. Okay, he said this on Friday. It's why the stock actually traded up. Now, what's important about that is now you have a definitive number on what he wants. I think that he's probably going to get it because there's no one else that has an asset like this. So that is my opinion of it. You do with that what you want. It is an opinion. It is certainly not advice, but because anything could happen. Anything can happen with these kinds of buyouts. But you're pretty wedged in there. Look at the breakout and the fail, right? So that's not the worst spot to try to get involved here for about $1 and then see if you're able to stay in this. Not the worst idea. We're seeing massive buys out there. Manchester United is another one people are looking at right now. People are looking to put money to work. Sovereign funds. This makes perfect sense. Now I want to go through 2 that you really need to focus on. So LABU is something that we've been trading not only in the FA Chasers community, but has been in the free newsletter for some time, on and off. I still have positions from back here in June. So I like this and I like it a lot, but we have to look at what we have. We have this bear flag here and we can't roll that out. What we want to do is we want to drill into this a little bit and just see if we can kind of figure out what's going on. So we look at that close and we see that that close is getting us above this little level, right? Just a little bit. So we're going to have to keep an eye on it, but you're definitely wedged in here now, guys. Okay, so whether this is forming a megaphone, a bear megaphone, because you can see it's starting to get wider and wider, or whether this encapsulation of these 1, 2, 3, 4, 5, 6 days is going to be significant enough to push us out, we need to watch this. You can see how we are sitting right above the 55, which is in dark green, and the 200 that is in black. Now, ZIM, I am watching very closely, and I said I would walk through why I'm looking at this stock more than normal. You can see how you are wedged in here. You are back into this channel. You are coming out with earnings soon. A lot of people are writing this company off. JP Morgan has a bear in this name, and they just came out and put a $30 target price on it ahead of earnings. So here we are again. We're not coming out to March 20th, and they're trying to get ahead of it. I think this makes sense, too, as to why they're trying to get ahead of it. We have had people in the office community that have been accumulating it down here for some time and just sitting with it. It makes a lot of sense. Now, if you start going through these earnings and you start seeing how they're setting up, they're not exactly missing all the time. Now, this was an absolute disaster on the revenue side, but this is a cyclical business. The blue line is the Baltic Dry Index, and this is the pricing of how ZIM gets paid. So you're looking at that going, well, that's just an outright disaster, right? Look, we're falling off that red line. What's that red line? Well, that red line to me is a demarcation line. And if we go through time and we just focus on the blue undercutting that, you can see something going back all the way 10 years. You can see that every single time that you've gotten here, you've only stayed under for the most maybe 6 months before bouncing back over it. So this is pretty much what I consider a floor in the Baltic Dry Index, barring some kind of catastrophic event. A matter of fact, you're back to catastrophic levels almost already with the pandemic when all the ships were sent down. Now, if you see here on the weekly, you can see very clearly what's going on right here with the little pullback and now setting up to push. Look at the undercut right here, right? Never happened, did it? So we broke out and you've never undercut. Now you just have these dojis sitting in there. So in other words, the stock is holding as the Baltic Dry Index continues to drop. might mean you're at a trough valuation here, right? And we can see how for weeks we were just unable to go any lower. And that might give us a bottom valuation. And that's certainly what it looks like to me going into getting a pretty hefty dividend. Last dividend was $2.95, and you start going through these, $4.75. Okay, some of them are very substantial, $2.85. Here was a special dividend for $17. So people are doing exceptionally well, getting 10% quarterly buying this. I would expect people are going to want that going into the March quarter. Your goal is to get up and in before then. Now, this is Zacks. Zacks is probably one of the most widely watched institutional spots for people to look at trades, and institutional ownership has been going up. But this is becoming one of the most searched stocks out there on Zacks right now. Don't sleep on that. Here's your price to book value. You're trading at 45 cents on the dollar, and people will say, well, you've been down at 45 cents on the dollar. Okay, the way that these names work is the same way when I walked everybody through why to buy toll at 45. Same exact thing. Just because you're trading at book or under book doesn't mean that you're going to move. You need an impetus. Okay, you need something. Well, to me, coming into the quarter, BDI going down, having a short percent of float being at 20%, having them increase it as it goes up, close to 5 days to cover, that might be enough of an impetus. So there's a lot going on here, and I would not sleep on this. Please comment on this video. Your comments are extremely helpful to me creating content. I greatly appreciate them. Subscribe to the channel and share this if you found value in it, and let me know how these videos could be better. If you are interested in some of the patterns that I went over and pointed at, this video at the end will walk you through them, and we will go from there. Everybody have a great day.